So if you want to gain 24/7 access to our latest insights and market views, download our J.P.Morgan Insights app now on your iPhone and iPad by scanning this QR code or clicking the link in the description box below to take our insights with you wherever you go. Hello. Now for 2021, we have advocated Asian investors to be internationally diversified when it comes to equity allocation. Most investors will have positioned themselves in the US, in China, and or broader Asia. There's been even some interests on Europe. But what about Japan? It is one of the largest equity markets in the world, and we believe there are fundamental reasons for investors to take a closer look at Japan's opportunities. Now, MSCI Japan in US dollar terms is only up 0.1% year to date. Yet, this is largely due to a weaker Japanese yen against the US dollar, as the index in local currency terms was up 10%. This reflects that the currency risk management is actually critical for foreign investors. Now, in terms of economic fundamentals, Japan was hurt by the pandemic for much of 2021. While the vaccination progress was slow at the beginning, 77% of eligible population are now fully vaccinated. Since then, the pandemic has become under control and Japan is allowing domestic economy to reopen. Japan's Service Purchasing Manager Index hit 53.0 in November, the highest number in 27 months. While the Omicron variant is an uncertain factor, the government was quick to limit foreign travelers' entry into the country. The government has also approved a supplementary budget of 5.8% of GDP for fiscal year 2021. About 1/3 of this proposed additional budget would directly support economic growth in 2022, including cash payouts to small and medium enterprises as well as families with children. While many investors are concerned about the rich equity valuations in the US, MSCI Japan's price-to-earnings ratio at 14.5 times is not only significantly cheaper than the S&P 500 or MSCI Europe, it is also below its own 15-year average of 16.3 times. This provides more margin of error in case there are some bumps on the road to recovery. Japan's overall earnings growth is also expected to be in line with the US and Europe in 2022. Now, in addition to the global economic recovery supporting corporate earnings growth, it is worth noting that Japanese corporate governance has improved since the start of Abenomics in 2012. Dividend payments and buybacks have risen steadily in the past decade. Company boards are now including more independent directors to monitor executives. This is important when investors consider the quality of companies via the environmental, social, and governance or ESG framework. Now, while much of the discussion above has been focusing on the broad Japanese market, we do need to emphasize the importance of active management. There are plenty of world leaders in technology, either servicing the domestic economy or the global markets, that investors can choose from. This includes areas such as electronic payments and e-commerce, cloud technology, serving businesses, and online marketing. The modest medium-term economic growth prospects need not be a constraint to these companies that can tap a growing trend.